Hi there, Serial Trader here. We're going to have a look at the major US indices and haven't done an update since just before August began, I believe. And surprisingly enough, we just whistled through August, making new highs, very little volatility. Sometimes August can be a weak month, but it certainly wasn't this time. But now here we are in September. And I believe we've gone up 7 months in a row as of August close on SPX. And if we were to close September out positive, that'd be 8 months in a row. Now, I'm not going to say that that's unprecedented because that kind of streak has happened before. I think, well, let's just have a look here. If memory serves me correctly, the most notable, relatively recent scenario like this would have been, let's see, the run in 2017 to where we peaked in January of 2018. And let me just count. Let's see if this was okay. So starting from here, so starting from here is where we'll start the consecutive monthly win streak on a closing basis, because this was a slightly negative month, not by much though. And that'll be 1, 2, 3, 4, 5, and that's a slightly plus 0.05% on that month. 5, 6, 7, 8, 9, 10. Okay, so 10 positive months on a closing basis in a row. And I'm not sure if that was the absolute longest record, but it might be. Certainly in any kind of recent memory, 10 in a row, hard to beat that. So we're currently sitting at 7 in a row. And the question is, do we get 8 in a row or more? Well, we don't know the answer to that question yet. But September, September certainly has lent itself to weakness, or at least forming a top in the past. Like, I'll bring you back to September of 2020. And you can see very early on in September, it looks like we topped here on September 2nd in 2020, and then the majority of September was a decline. We bottomed out near the end of September, and then had a partial retracement into mid-October, and then went down and didn't quite test the lows towards the end of October. Okay, so there is certainly a seasonal tendency to get some weakness now, especially that we're in the context of going up 7 months in a row, so it's not like we aren't due for some sort of at least pullback, if not something more, right? So I'm going to leave all the wave labels off, because really nothing's changed since my last video. We just continue to subdivide higher, so you could say we're extending more in the 5th or extending more in the 3rd. It doesn't really matter. We're still in some sort of extending impulse wave until proven otherwise. But I'll tell you what I'd be looking for to start questioning the continuation of that. And you can see there's been a nice pattern emerging where we basically have this little panic sell-off. Not big ones, but I mean, I guess it's big considering the kind of low volatility environment this has been in. And that's where I believe it's the 3rd Friday of every month, so options expiration time. We get this nice dip right around that time each month, and I think we're 4 or 5 months into that pattern. So I'm not saying that's necessarily going to happen again here in September, and that we have to wait for that to have any kind of weakness. We may have started some weakness today, and I'll get to that. But what would be notable as far as changing this kind of relentless trend up would be if we go down and actually take out one of these spike lows. Well, obviously starting with the first one here, which would be the August one, and that's at 43.6773. So if we could actually come down and take out, not just test or get near this low, but actually take it out by a decent amount, have a partial retracement that does not make new highs, okay? So we need a lower low and a lower high, so maybe like a little 5 down, 3 up in Elliott terms, and then start to roll back over again, and then maybe we can, embrace that we actually have a real correction underway, or something more than just, a couple days to the downside, because that's really all we've been getting for a very long time here. So I won't go into too much more detail other than that. I mean, all the major red flags are still up. We still have major, divergences on the weekly and monthly charts, daily as well, of course. I'm not even going to go through it. Nothing's changed since, prior videos in that regard. So I'll just leave it there. But yeah, this would be where I'd really just start paying attention to any kind of meaningful downside, would be actually the ability to take out one of these prior lows, starting with this one at 43.67, okay? Until that gets taken out, I mean, this is all just technically working for another high or low until proven otherwise, right? So the trend is in force until it actually starts breaking, and it just hasn't done that yet. Now, that being said, it's nice to try and be early before, actually goes down enough to break it. So let's see if we can get any other insights here. Okay, so candlesticks. All right, we got it some, usually when you get towards the top of the range, the candlestick bodies get smaller. They even become doji stars, potential reversal signals, and then you start rolling over. So we have that potential setup in place, although a lot of work to do. We haven't even closed below the daily T line here. So certainly nothing really worth mentioning as of yet. Obviously, we're overbought here on the oscillator, but we haven't actually crossed down below from the overbought level. So technically, it can just stay overbought, as it has, several instances here in the past. I don't know if there's much really to mention on the weekly here as far as candles. Well, since we just started the shortened week, no, there's not much to mention, so I won't bother. So we'll keep it a little more brief this time. So on the Dow Jones Industrial Average, it's definitely weaker. So the Dow so far, it put its peak in here on August the 16th. So that's a significant difference between the Dow and, say, the Nasdaq and the S&P 500. And often at important or, relatively large degree market tops, we'll say, you'll have the major indices not confirm one another. So whether that be the Nasdaq peaks before the Dow and the S&P, or any combination thereof, in this case, it's the Dow peaking first, right? And the other two not. So that's called a non-confirmation across the, normally highly correlated major indices. So there's that. The Dow has cleanly closed below the 20-period simple moving average and the T-line. We're not quite down to that 50-day simple, which we certainly bounced off of last time. So that would be notable too. If the Dow can get below and stay below the 50-day simple moving average, I think that would be another sign of more significant weakness to come. But we're not there yet. Certainly watching. Nasdaq Composite. So the Nasdaq Composite made another new intraday high, all-time high to date, but a very small candle. So that's a doji star, potential reversal candle. But of course, we actually have to go down to confirm that being a reversal candle. And obviously, we just have to wait and see what happens tomorrow and the rest of the week, etc. Other than that, not much to mention on the Nasdaq Composite. I think the Nasdaq 100 NDX looks pretty similar to the Nasdaq Composite. And yeah, same idea. Nasdaq 100 made a new high today. Bit of a doji star kind of body though. So we'll see if we can get a reversal. Let's see what else. Oh, a couple things just to throw in there, since I think they're worth pointing out. Well, hang on. So I'll show the Russell 2000. And you can see the Russell 2000, I mean, it peaked back here in March. Yes, March. So that's a pretty big non-confirmation as well. So we've been in the sideways range. Now the question is, do we break up or do we break down? Obviously, until it reveals itself, you don't know. But it looks like this is just a three-way move up to a lower high, and now it looks like we're kind of rolling over here a bit on the Russell. So that could be kind of a little warning sign of some risk off, right? And let me just find another thing I wanted to look at, the Dow Transports. And here, let me just pause while I bring... Okay, the Dow Transports. Now, the Dow Transports, so there's the old Dow theory, and that's where the transports can either confirm or diverge from the Dow's high. Well, the transports made their high back here in, let's see, that was May, okay? And as you can see before, when I showed you, the Dow Jones Industrial Average peaked in August, so that's pretty significant divergence. Normally, during a strong trend, they basically are going together in the same direction. Now we have a clear divergence, and this looks like a very, looks like 5 waves down and maybe a 3-wave recovery, and maybe we're getting ready for another leg down here on the transport. So that's another kind of warning flag, risk off sign. Again, these signs have kind of been around for a while here, like weeks and months at this point, but we just haven't gotten that major break on, certainly the S&P, the Nasdaq, even the Dow. I mean, it just peaked in August. It hasn't gone down that much yet. So the warning flags are up, but we have not actually broken down yet. Not yet. It will happen. Exactly when? I mean, obviously that's been very elusive, but certainly watching for it. Okay, well, I think I've shown what I wanted to show as far as indices go. VIX, a little bit of movement up in the VIX today. Well, we closed up 10% or so on the VIX, so that's not bad. But as you can see, for this to really start meaning something, we got to really get well above 20 and even, I would say, 25. Otherwise, just another one of these VIX spikes, and then we just cool right back down, and more new highs to come on the S&P and all that. So nothing revealing here yet on the VIX, although it has to start somewhere, right? I will note that VIX, it's been diverging from the S&P in that VIX made its lows way back here, and obviously the S&P just recently made its highs. So there's a divergence in that regard. And you would typically look for that at a major top in the market, the VIX not making lower lows, even though the market was grinding out at least marginally higher highs. So we do have that as well. Just some data points, right? Now, one thing I'll mention, we are on a sell signal here on the VIX VVIX tool. So let's look at this. And I'll point out some things I'm looking at. Let me just get rid of this little channel. And okay, so we see we had the VIX bottom way back here, and VVIX bottomed over here, not confirmed by VIX. We had a divergence between VIX and VVIX, a fairly large, at least in the amount of time where their bottoms diverge. That's significant divergence. Now we got above the red moving average on VVIX, and now we've gotten below the blue moving average on SPX. So technically that is a sell signal using this tool. And you can see we even had a little bounce attempt today. And look, instead of finding support like we typically do during our uptrends on this blue moving average, so we initially broke down below the blue moving average and then came up only to find resistance against the blue moving average, and possibly, at least on a minor level, started rolling back over towards the close of the day. So somewhat promising. Obviously a lot of work to do before we can actually consider that any kind of significant correction is underway, but it has to start somewhere. And we certainly have ingredients to be watching here as far as it having started now or being close to doing so. So that's really what I wanted to go through on the major indices. Wanted to get this out, I think yesterday or so, but just didn't quite find the time. I would like to do still a video on gold and some gold ETFs, GDX, like gold miner ETFs. So I'll do that sometime soon, within the next few days maybe. And also Bitcoin and crypto, it looks like they've put in a nice reversal to the downside. So I think there's some updating to do on that as well. So sometime this week, try and get that out. All right, Serial Trader signing off.